Hello, I'm Tim Beggins, president of Elk Trading Company. In this, the natural gas weekly recap. Natural gas prices are higher. This is now for the spot August contract, currently trading at 367.20, up 14.6 cents or over 4%. As you can see here on the daily chart using the Bollinger Band, we're still below the middle part of the Bollinger Band at 373.90, but we've held support at 344.80 even after a very large storage report. And as you can see right now, that our first objective will be that 373.90. So let's take a look at the hourly chart. As you can see here, we are above the daily pivot. At this case, the daily pivot is well below the market at 350 and 8 ticks. As you can see, we held pivot support at 342.10 yesterday, and now we have bounced higher and we're heading toward our second pivot resistance at 370. And above that is 380 and a half. Currently, right now, again, we're holding it around that first pivot resistance, which was 361.30, and trying to make a run for 370. Let's take a look at the EIA storage report for the week. This ended for the June 20th week, and it was a plus 96. This was about 11 BCF above expectations, and the market did come off for the July contract as well as the August contract, but then August reversed. And currently, right now, we stand at 2.898 TCF in the ground. This is below last year, but above the 5-year average. As you can see, we're still 6.3% below last year. Let's look at the front to back spreads. And in this case, this is the Jan versus the August contract. As you can see, with the August contract pushing higher today, the spread has come in by about 3.9 cents, currently trading at 138.40, down 3.8 cents. As you can see right now, we are well above the 120 level, and that will be our objective if the August contract can continue to rally on some warmer temperatures and potentially higher LNG exports. Let's look at the Jan versus October spread, also coming in down 3 cents, currently trading at 126. We'll look to see if it comes down again in that 120 level as our first objective. And here's the 8 to 14-day temperature outlook, above normal across the Pacific Northwest and then across the Southeast. This is the most important level because the Henry Hub is based on Erath, Louisiana. And as you can see for the July contract expiration, cash converged with futures, which meant that, well, we didn't have as much demand in Louisiana and prices did come off despite the above normal temperatures all the way from St. Louis to Chicago, all the way back to New York. So let's look at the 3 to 4 week temperature outlook. And as you can see here, it's much above normal across parts of New England and in the interior West. And it's above normal in just some areas around Florida and across much of the western half of the country. Let's look at the heat risk. And we do have some residual extreme heat risk still in Indiana and parts of Ohio today. But as we get through the forecast, we see that this dissipates starting tomorrow. We still have some major heat risk across much of the Carolinas into Virginia and parts of Washington, D.C. This continues through Sunday, but then it starts to ease a little bit next week. As you can see, it just lingers around North Carolina and parts of the Delaware, Maryland. And this then moderates again Wednesday and Thursday. What else is going on? Well, look, we've got an area of disturbance that we need to keep an eye on. There is a system here just forming off Belize. This will be making it into the Gulf of Mexico / America. And we'll look to see if this gets pulled into the lower part of Texas next week. Here's the satellite. As you can see, this is the area that we're looking at right here off Belize. And this is, in fact, starting to grow as we look at the satellite picture. And there's a better close-up of it. These thunderstorms are starting to get even bigger, as you can see. And this will be pushing to the northwest here and getting into that Bay of Campeche area in Mexico, and we'll look to see if this will be pulled into the interior parts of the United States, such as Texas and Louisiana. And here's the Saharan air layer. This is the dust off of Africa. As you can see, we've got an area that is really across much of the Caribbean right now. This will again push to the west into the United States. This may dissipate this particular storm, or at least keep it tapped down. We have another swath coming across, and so that is inhibiting any storm development in the mid-Atlantic region. How are we doing on drought? Same. We're continuing to see an extreme drought forming around San Antonio all the way back to El Paso and looking back all the way into parts of California and Nevada. And let's look at the stocks for our oil and gas E&P sector. These are stocks that have a $2 to $10 billion market cap and have a short float over 10%. Well, there's only six. Civitas came off the board this week. And right now, currently, these stocks are floundering, really down slightly today, as you can see from the map. We're looking at Apache is up today, and let's look at the 1 week performance. As you can see, it's been mainly negative because crude oil prices have come off, as well as natural gas prices. And these are the stocks that have done poorly here. Northern Oil and Gas and Comstock have done the worst, with CNX really holding the line at only down 2.83%. We'll look to see if these prices can move higher on the futures and pull the stocks that we're looking at here higher. And again, recapping, we are looking at 367.10, up 14.5 cents, or 4.11% for the August contract. So let us know your thoughts in the comment section below. Please hit that like and subscribe button. Thanks for listening. We'll see you soon.